Let's talk pensions. Uh, earlier on this week, I have a private pension, not a state pension, obviously, because I work in the public sector, and I do contribute every month to my pension, and I have done for about well since 2003 maybe. So I've been contributing to my pension for a long time, a few years now. Uh, and obviously, since I've been doing my research about the economy and stuff like that, I've been thinking for a long time to get my money out of pensions because I believe there's going to be a stock market crash and I might lose all my money. Uh, well, that's initially thought. Everything in the stock market's going to go to zero and get out there, get all my money out of the stock market in the bank, and I got on the whole gold and silver fear porn train. Uh, but obviously, after a little bit more research, well, looking at the pension thing, obviously, I discovered if I was, because I did look a lot into it. I would have had to take a little haircut. I would have probably to lost about to take a pension out early. I could have lost as much as 20% of my pension, and that's a lot of money. So I wasn't prepared to do that because that's like 20% would have been nearly 2 years of contributions just gone to take the money out early, and even still, you're not guaranteed to get all the money anyway in a lump sum. Because I thought about it, so I just looked at other things, and obviously when I've done a bit more research, I kind of realised that even if there is a economic crash and Armageddon, whatever, the stock market's still actually going to be standing, and there's still going to be companies making a lot of money and being very profitable. So the whole, yep, I don't have my savings in the bank, and it is in gold and silver, and obviously I've like 90% of the people, 99% of people have lost money in shares recommended by friends who have, oh, I know this guy works in this company, and you invest, you'll get 10 times your money back next week. We've all lost money in the stock market. Well, at least I have anyway, and a lot of people I know have. And that's something to leave to the professionals, I believe now. It's something, obviously, I do watch the market and I do look at some companies, and it is tempting to invest, but I'll just buy my hard assets. But back to my pension. Uh, I do believe a lot of people will lose all their pension money. Well, we'll still have the figures there, but due to inflation, I believe we're eventually going to have a hyperinflation. It's the fiat money is going to be worth nothing. So I had a financial advisor, and I'd been saying to my financial advisor for about 3 4 months now, like, even like try to explain to people that are in finance that you believe there's going to be a big crash and you want your money out of bonds and things like that, because that was another thing that I found out. You can take control of your pension. Keyword of this video is take control. Take control. Uh, I started to look at my pension to see what was invested in. Like, a lot of people I speak to, yeah, they have pensions, and if you would say to them what's it invested in, they'd be like, they look at you like you're trying to sell them gold and silver. So they have no clue what the pension's invested in. They think like they've got these angels that look after you and have you at their best interest to make sure your pension's going the right thing. And if you actually read your pension, well, one of my pensions, I've got two. One I actually read one today. It says that the aim to make per annum either 3% to 0.5% per annum. That's what the target is. That's the target each year. So they can make between 3%. That's like the highest, I think, to 0.5%. So they can actually lose money, and that's still making the target. Obviously, if it goes below that, they make minus 5%. Sorry, minus 5%, yeah, or minus 10%. If it goes to minus 10%, whatever, then they're gonna have to make it. I don't know, make it another person looking over it or something. Something gets, I don't know, obviously get sacked, but they'll have to someone else have to take control of it in the company, I suppose. So I looked at my pension and I realised it was half of it was invested in bonds. 25% was invested in property, and the rest of it was split up into other companies. Just what sector? I can't remember. It was a bond sector, property sector, and what was the other one? I can't remember. Anyway, and I just thought, like, long term, these things are gonna go down. For one, I don't want to be in property because we're gonna, well, even though we've never come out of the recession officially, when we officially go back into the recession, property prices are going to come down again. The property market, bonds, and we all know about bonds. That's going to be the last bubble to burst when all these currencies keep popping and pop. These countries keep going in the eurozone. They're all going to be rushing to bonds, so it's going to be the biggest bubble. It's going to be bigger than the property bubble. And then when the bond market crashes, the only way to go is precious metals. So when that does happen, I think obviously ideally hold physical gold and silver. And if I could have my pension in physical gold and silver, like swap all that fiat for actual physical gold and silver, that'd be great. But I found the next best thing in terms of pensions, as I says, ideally I could just take that lump sum out and buy precious metals. I can't do that because I'll lose 20% of my pension at least. You could probably lose more, and then you're not even guaranteed to get all of it in a lump sum. So I put nearly all my money in a metal company, a precious metal bullion company called BlackRock. I've not got my other software I can show you the screen, but they've made about, since 2008 crash, I think the stocks went up 776%, outperforming the FTSE and various others. And I put on my pension, even though it's stupid to put one whole thing on your whole pension to one thing, but I've done that it was like it's a little bit of a knee-jerk reaction. It's something I've been thinking about a long time, and I went on a pension website and I looked about how you obviously can manage your own pensions, and you can actually, because I told my financial advisor to do this and he never ever done it. So I've done it myself, take control, and they have, I think, they're invested in gold mines, silver mines, copper mines, and the main thing is they have a lot of money actual in physical bullion, which is important. Yes, they have lots of mining stocks and Gold Corp and all these. I can't remember. I should have got the article what they invested in. But to cut a long story short, to make a quicker video anyway, they invested in 10 different mining companies, and they do hold a lot of physical bullion, which was the main thing. And that's why I put all my pension, that I've been paying in for about 8 years now, 7-8 years, into them. And obviously I will eventually diversify. I will put, I don't know, 20%, 30% in agriculture, and then maybe another small percentage in land, and I'll mix it all a bit. I will do it eventually, but it was such a relief just to know that all the money I've been putting away for years is not in bonds or property companies anymore. And it just shows you my financial advisor, who's sacked without being sacked officially, but I won't use him anymore. I've done it myself and took control. So, as I says, there's been a big move in gold and silver. The people, you can say it's for the European thing because of the euro uncertainty, but the European uncertainty's been going on for like a year now. So it's not a case of people just say, "Oh, Europe's gonna go, so I'm gonna go back in precious metals." So gold and silver's went back up, but obviously we've seen a big gain in copper. Copper made a massive move. In this, I think 1.5% of a big move the other day. And my housemate, who I keep referring to, I will introduce you to him one day. I've been saying to him all last week. He said, "I got some cash, I want to buy some gold." I was like, "Buy it." He's like, "Okay, I'll wait." I said, "Buy it." He's like, "Okay, I'll wait." He's looking on Goldline, all these bullion dealers websites every day, every night. I'm like, just buy it. If you got cash and you're thinking about buying gold and silver, when you got the cash, buy it. Even if gold goes to, if it goes to 2,000 tomorrow, if it goes to 1,500 tomorrow, it's still undervalued. Get cash, buy it. There's no point trying to time the market. And as ever, gold shot up to 1770 or 1717, I think it is at the minute. And silver is up to 3370 at the minute, whatever, as I make this video. But yes, gold and silver will go down again. It is now I've been in this game for about hardcore for about, I don't know, nearly a year now. I didn't understand what volatile. If you didn't understand what volatility means, I really do now. Like, it's so volatile. When you watch gold and silver to other stocks, other commodity, other other stocks, it's crazy, and there's no point trying to time the market. When you got cash lying about, just buy it. It's undervalued. If it goes to 2,000 tomorrow, it goes to 2,500 tomorrow. If it goes to 1,500 tomorrow, it's undervalued still. Buy it. And now my mate's like, oh. I'm like, even now, buy it, because something big might happen tomorrow and it could be 10,000. So buy it.